You see, the market doesn't shout. It doesn't wave a red flag in front of you and say, "Here's the top," or "Here's the bottom." No, the market whispers. It talks in a quiet, hidden language, and if you can't hear it, you're blind. Most people are blind. They're guessing, they're hoping, they're praying. But the market doesn't care about your prayers, your hopes, or your guesses. It cares about one thing: price. And price is the only truth in the whole game. Now tell me, have you ever sat in front of the tape and felt like it was talking to you, but you couldn't quite make out the words? I learned long ago that prices don't move without a reason. They don't jump for fun. Every tick, every uptick and downtick, every stall, every rush, it's all part of the market's grammar. But most people, they're too busy making noise in their own heads to hear it. They want to predict. They want to say, "Oh, the market should go up because of earnings," or "It ought to go down because of politics." That's nonsense. The market doesn't do anything. It does what it does. Have you noticed how the market always proves the most people wrong at the worst possible time? That's because most people don't listen. They impose their will on the market. They want the market to be reasonable, like a partner in conversation. But the market isn't a partner. It's a mirror, and it reflects the strongest forces. Supply and demand. When demand is hungry, prices rise. When supply weighs heavy, prices fall. It's that simple. But the trick isn't knowing the words, it's hearing the tone. Because sometimes the market says one thing but means another. How many times have you seen it pretend to be weak, only to shake off the timid hands and rush higher? The hidden language of the market is in the way it absorbs orders. Picture a sponge. You pour water on it. The sponge soaks it up without overflowing. That's accumulation. That's strength. Other times you pour just a little water and it drips right off the edges. That's distribution. That's weakness. Do you see how simple it is? But simple doesn't mean easy. It takes patience to stand there and watch without jumping. How many times have you ruined a good trade because you couldn't wait? Patience is the hardest part. People want action. They want to be in the market all the time, like a gambler at the table who can't walk away. But the big money, the real money, is made in the waiting, in the listening, in the reading of the tape until it tells you, clear as day, now. And when it says, now, you step in with both feet. Not before, not after. Exactly when the language turns. Can you imagine how many fortunes are lost because people can't resist being early? I remember times when the market would sit still, quiet as a stone. No movement, no life. But underneath, you could feel it. Orders being placed, hands changing, volume shifting. That's the market breathing. If you only look at price without volume, you're only reading half the book. Volume tells you how heavy the words are. A rise on small volume. That's just chatter. A rise on big volume. That's a declaration. Don't you feel the difference when a move has weight behind it? And then there's the false move. The market's trick. A sharp drop to shake out the weak. A sudden rally to bait the greedy. It's all part of the language. The market tests you like a card shark watching your eyes. Do you flinch? Do you fold too soon? Or do you see the bluff for what it is? That's why most people lose. They take the first signal at face value. But the market is deeper than that. It layers truth under lies, and you've got to dig with your eyes, not your ears. Have you noticed how the biggest moves come right after the market fools the largest crowd? I'll tell you this. There's no manual, no formula, no perfect chart that translates the language for you. You have to live it. You have to sit with it until the rhythm becomes second nature. The tape isn't words on paper. It's a voice you've got to train your ear to hear. It says, here's strength, here's weakness, here's danger, here's opportunity, but it never shouts. You've got to quiet your own mind to hear the whisper. Can you quiet your mind, or are you too busy telling yourself stories? Stories kill traders. This stock has to go up because the company is good. This stock must fall because the news is bad. That's nonsense. The market doesn't read newspapers. It doesn't care if the company makes widgets or windmills. The only thing that matters is whether the crowd is buying or selling. That's the hidden language, crowd psychology. Fear and greed wrapped up in numbers. And those numbers, those prices, don't lie. Tell me, when you look at a chart, do you see a story, or do you see the crowd's footprints? Footprints. That's what they are. Every buy, every sell, every hesitation leaves a mark, and those marks line up like tracks in the sand. If you follow them, you'll know where the herd is headed. But here's the catch: the herd never profits. The herd gets trampled. The footprints matter only because they tell you where not to stand. Do you want to be trampled, or do you want to stand aside until the stampede passes and then walk in the clear path left behind? I've seen traders chase every wiggle, every bounce, like dogs chasing cows. They wear themselves out, and the market eats them alive. The hidden language isn't in the wiggles, it's in the trend, the great current underneath. Prices rise, fall, but the underlying tide is steady. You don't need to catch every wave, you only need to ride the tide. Ever try to swim against the ocean? That's what it's like trading against the trend. Doesn't it make more sense to let the tide carry you? But here's the trouble: people don't like patience, and they don't like discipline. They want to be clever. They want to outsmart the market, pick the exact top, the exact bottom. That's pride. And pride costs money. The language of the market doesn't give you exact words. It gives you tone, hints, direction. That's enough. You don't need perfection. You need alignment. Are you aligned with the tape, or are you fighting it? Sometimes the tape tells you nothing. Dead air. That's when people get jumpy. They want to force trades, make something happen. But nothing happening is information too. It means wait. It means the market is gathering itself. And when it does break, the move will be worth it. The hardest thing in the world is to do nothing when you're itching to do something. Can you sit still when the tape is silent? You see, trading isn't about being right. It's about being aligned. You can be wrong half the time and still make a fortune if you catch the big moves. But if you're always trying to be right, always needing to prove yourself, you'll bleed to death from 1,000 cuts. The hidden language of the market isn't about ego. It's about humility. About listening instead of telling. Do you want to be the storyteller or the listener? I could sit for hours just watching. No trades, no bets, just watching. Because in watching you learn the rhythm, and the rhythm never lies. It's like a heartbeat. Fast when the crowd is greedy, slow when the crowd is scared. Sometimes irregular, sometimes steady. And when the heartbeat changes, you feel it before you see it. Have you ever felt the tingle before a big move, when the whole tape seems to shift under your eyes? That's the hidden language. It's not in the news. It's not in the chatter. It's not in the experts shouting on the street. It's in the tape, in the prices, in the way the market absorbs or rejects orders. And once you start to hear it, you can never unhear it. It becomes the only thing you trust. Everything else is noise. And yet, how many traders drown themselves in noise every single day? The truth is, the market talks all the time. But it doesn't speak English or French or German. It speaks in ticks, in trades, in reactions. And if you want to survive, you've got to learn that tongue. Not from books, not from teachers, but from the market itself. The market is the only teacher worth listening to. And it charges the highest tuition. Your losses. Have you paid enough tuition yet? Or are you still paying the market to teach you the same lesson over and over? When you sit down to really watch the market, the first thing you notice is price. That's the obvious part. Everyone can see whether a stock is going up or down. But the real meaning doesn't come from price alone. Price is just the words on the page. You need to know if those words carry weight. That weight is volume. Without it, price can be a hollow signal, a bluff, a whisper with no body behind it. When price and volume speak the same story, that's when you've got something you can lean on. That's when the tape stops being chatter and starts being truth. And I'll ask you straight, how many times have you been caught chasing a price move that had no legs because you ignored the volume? I've seen prices drift higher on little trades, a lazy climb that looks good to the eye. People jump in, thinking they've caught the start of a run. But the volume isn't there. There's no urgency, no demand, no crowd pushing behind it. And what happens? The move fizzles. Price drifts back, leaves those eager buyers stranded, holding the bag. That's the trap of price without volume. It tells half the story. And half a story in this game is dangerous. Have you ever read a headline and thought you knew the whole tale, only to find the details were the exact opposite? That's what trading price without volume is like. Now take the opposite picture. A stock breaks out of a range, surging past resistance, and the tape lights up with heavy trading. Buyers are stepping up, taking every share offered, swallowing supply whole. That's conviction. That's demand talking loud and clear. That's when price and volume sing the same tune. And when the two line up like that, you're not guessing. You're listening to a message as plain as day. Doesn't it feel different when the crowd shows its hand so openly? The tape is full of little tells. Sometimes the market tests a level, dips into it, and snaps back with heavy buying. That rebound means someone big was waiting to scoop up stock. Price alone might just look like a bounce, but add the volume, and it's a signal. It's like hearing a word spoken with force. You don't just see the move, you feel the intent behind it. Without that, you're left reading lips without sound. And tell me, would you trust a conversation if you only saw the lips moving? I've watched days when the market was quiet, prices barely moving, and then a sudden burst of volume hit the tape. The price shift might be small, but the activity tells you something's brewing. That's the market whispering louder, saying, pay attention. You see, the big players, the ones who move size, they don't care about a dime here or there. They care about positioning. And when they step in heavy, the volume shows it long before the news does. That's the hidden language you have to train your ear for. Do you ever catch yourself staring at price without asking who's behind it? Weakness shows itself in the same way. A stock can rise, but if it climbs on thin volume, it's fragile. It's like a ladder made of straw. The first gust of selling knocks it down. On the other hand, if a stock holds firm while volume is pouring through, that's strength. Sellers are trying to knock it down, but buyers are taking everything without budging. That's how the tape tells you who's winning the battle. You don't need an analyst to explain it. The fight is right there in front of your eyes, in the numbers. Haven't you noticed how much cleaner trading becomes when you watch the battle, not the commentary? One of the hardest lessons I learned was to stop treating every price move as important. Not every uptick means strength. Not every downtick means weakness. The tape is full of noise, little jabs and feints meant to shake you out. But when those jabs come with heavy volume, then you pay attention. That's the difference between a shadow punch and a real blow. You don't need to dodge shadows, but you'd better respect a punch with weight behind it. Can you tell the difference? Or are you still jumping at every flicker? The beauty of volume is that it tells you about conviction. Price alone doesn't show conviction. Price can move on rumors, on thin air, on small traders playing around. But volume shows the crowd's decision. When the crowd votes with its money, the tape records it. And no opinion. No prediction, no headline can outweigh that vote. That's why the best trades come when price breaks in one direction and volume confirms it. It's not just motion, it's commitment. And in this game, commitment is everything. How often have you mistaken a lack of conviction for strength? You'll hear people say the market is manipulated. Sure, there are games, there are tricks, but even manipulation leaves footprints. A push without volume is just a shove in the sand. It doesn't last. The manipulators can only hold the line until real money steps in. When it does, their game is over. That's why you don't chase the small moves. You wait for the market's true language when price and volume say the same thing. Because once they do, even the manipulators can't fight it. Do you see now why patience pays more than cleverness? Think about distribution. A stock might look strong, climbing slow and steady. But if the climb happens with heavy selling hidden in the tape, that's distribution. Big hands are unloading into strength. The price goes up, but the volume tells you it's rotten inside. Without watching volume, you'd never know the insiders were slipping out the back door. But with volume, the trick is exposed. How many times have you been caught buying strength that was nothing but distribution? On the flip side, accumulation works the same way. A stock sits flat, price doesn't budge, but heavy volume keeps trading hands. That's accumulation. Smart money soaking up supply quietly. To the eye, nothing's happening. But the tape tells a different story. And when the supply dries up, price leaps like it was waiting for the starting gun. Price alone wouldn't tip you off. Volume gives you the clue. Don't you think it's wiser to follow the footprints of smart money than to chase headlines? You can't fake volume. You can fake a price move for a little while, but volume always reveals the truth. That's why I say the cleanest trades, the ones you can really stake your money on, are the trades where price and volume line up. They don't line up every day. Most of the time, the market is muddled, mixed signals, half-truths. But when the two come together, it's like the market is speaking in a clear voice. And if you're paying attention, you'll hear it loud and plain. Are you really listening, or just looking? The first signal the market gives you is almost always a lie. That's a hard truth, and most traders never accept it until they've paid for the lesson a few times over. You see, the market has a way of drawing you in with a move that looks real, looks solid, looks like the beginning of something big, but it's just bait. It's the market's way of testing who's watching with steady eyes and who's going to jump like a fish at the first wiggle in the water. If you've ever rushed into a trade on the first sign and then watched it reverse right back in your face, you know exactly what I mean. Doesn't it sting worse when you realize the market never fooled anyone but you? The reason that first signal is usually false is simple. The market is designed to shake the weak hands out. Think about it. If every breakout was real, if every dip was the start of a collapse, trading would be too easy. Everyone would win. But this business isn't built that way. The market doesn't reward eagerness. It punishes it. That first sharp move is often meant to test conviction, to trigger stops, to stir emotions. The real move comes later, after the noise clears and the weak are out. Tell me, how many times have you sold too soon because you believed the first dip was the beginning of the end? Take a stock at a major level, sitting just under resistance. The first breakout looks strong. Price pushes through, traders rush in, and for a moment it feels like the rocket is ready to launch. But then supply shows up, heavy selling hits, and the price slips back under the line. That's a failed breakout, a trap. The market lured in the eager buyers, then punished them for their impatience. The first signal was a lie. The second, when the stock regains strength and breaks out again with conviction, is the truth. But most of the crowd never makes it to the second move. They've already been burned by the first. Isn't it always the case that the market tests you before it pays you? The same goes for breakdowns. A stock falls under support, panic spreads, stops get triggered, and traders dump their positions. But instead of collapsing, the price snaps back, climbs higher, and leaves the shorts stranded. That first break wasn't weakness. It was a trap. It was the market shaking out the fearful, drawing in the greedy, and then reversing to expose them. Only the patient trader, the one who didn't chase the first drop, survives to ride the real move. Have you noticed how the market seems to wait until the maximum number of people are wrong before showing its hand? That's the hidden trick in the market's language. The first shout is rarely the truth. It's the second, the confirmation, that carries weight. You have to learn to test the tape the same way it tests you. Watch how price behaves after that first signal. Does it follow through, or does it stall? Does the volume support the move, or is it just a hollow push? These little tests tell you whether the market is speaking honestly or playing a bluff. But most people don't want to wait for proof. They want action now, and that impatience is exactly what the market feeds on. Do you see how your own eagerness becomes the market's weapon against you? I remember sitting with the tape, watching stocks jerk around at key points, and thinking the move was real. I'd jump in, excited, certain I was early on the right side, and more often than not, I was dead wrong. The market taught me over and over that the first move is almost always wrong. It's not the signal to act, it's the signal to watch, to wait, to let the market prove itself, and when it does, when the noise clears and the real direction shows, then you act. But by then, the impatient traders are gone, licking their wounds. Haven't you felt that sting when you realized you were nothing but fuel for someone else's trade? False moves come in all shapes. Sometimes it's a spike up that collapses in minutes. Other times it's a slow drift down that suddenly reverses. But the purpose is always the same: to trap, to pull in the largest number of people on the wrong side so their stops can feed the other side. That's how the market works. It's a machine built on the losses of the many. The first signal is the bait. The crowd bites, and then the real move begins once the trap is sprung. You either fall for it, or you stand aside and wait for the second, truer signal. Which side do you usually end up on? This is why discipline matters more than cleverness. You don't have to predict the first move. You don't have to guess. You just have to recognize that the market is more honest after the test. The first move is the feint. The follow-through is the strike. Traders who jump on the feint get slaughtered. Traders who wait for the strike survive. The difference is patience, nothing more. And patience is harder than analysis, harder than charting, harder than any tool you can buy. It's you against yourself. Do you trust your patience enough to ignore the first signal? I've seen days when the market opened strong, straight up out of the gate, only to collapse by the close. The opening move was the lie. I've seen the opposite too, a market that opened weak, falling hard, only to recover and end higher. The first move, again, was the lie. The tape talks all day, but the first shout, the first burst, is often a test. If you treat it as gospel, you'll lose. If you treat it as a question, you'll learn. That's the real difference. Do you answer the market's first shout with your money or with your patience? It's the same in individual stocks. A rumor hits, price jumps, traders chase, and then silence falls. The stock drifts back, leaving the rumor chasers empty-handed, or a sudden scare drops the price, only to rebound once the weak holders are gone. The rumor wasn't the truth. The scare wasn't the truth. The real truth was in the follow-through, in what happened after the crowd reacted. That's the pattern you have to train yourself to see. How many times have you realized too late that you traded the crowd's reaction instead of the market's direction? So when you hear me say the first signal is usually a lie, understand that it's not about being cynical. It's about being realistic. The market speaks in tests. It throws out false signals to measure the crowd, to flush the weak, to bait the greedy. The trader's job isn't to answer the first call. It's to watch, to listen, to wait for the truth that comes after the lie. Because once the test is over, once the weak hands are gone, the real move begins. And that's the move you want to ride. Don't you think it's better to let the market prove itself before you stake your money on it? The market is like the ocean. Every day it throws up waves, little ripples, sudden splashes, sharp curls that look dangerous or exciting. Traders who don't know any better chase those waves, paddling frantically, diving in and out, exhausting themselves for a few feet of movement. But those who've spent enough time watching know the truth. It isn't the waves that matter. It's the tide. The tide is the great current underneath. It carries everything with it, slowly but powerfully, and you can fight it all you want, but it will always win. That's the market's hidden language right there. The difference between the wiggles and the tide. How many times have you lost money because you were so focused on the little wiggles that you forgot to ask which way the tide was flowing? A trend is nothing more than the tide in action. It's the broad move of the market or a stock over time, up or down. The wiggles, the daily jumps and drops, are just noise inside of it. They tempt you to act. They trick you into thinking something big is happening. But the real money, the lasting profits, they come from aligning yourself with the trend, letting the tide carry you instead of trying to swim against it. Doesn't it seem foolish to bet against the ocean? I've seen traders who treat every bounce, every dip, as an opportunity. They're always busy, always active, always chasing. They think more trades mean more chances to win. But more often, it means more chances to be wrong. They're trying to play every wave, but no one can. It's too much noise, Too much friction, too much guessing. The best traders don't need to catch everything. They only need to catch the big moves. The tide that lasts weeks, months, sometimes years. That's where the fortunes are made. And tell me honestly, do you want to make a fortune, or do you just want to stay busy? The wiggles are seductive because they look exciting. You see a sharp rally in the morning, and you think, here it comes. But by the afternoon it's gone. You see a sudden drop and panic, but the next day the stock recovers like nothing happened. That's just noise. The tape is full of noise. It lures you in, shakes you out, and leaves you spinning. But if you step back, widen your view, the trend becomes obvious. The tape stops looking like chaos and starts looking like a map. The direction is there, plain as day, if you're patient enough to see it. Isn't it funny how what looks confusing up close becomes simple from a distance? When the tide is up, even the bad stocks rise. When the tide is down, even the good stocks fall. That's another truth most people don't want to face. They think a strong company will always rise or a weak one will always fall. But the market doesn't care about companies in the short run. It cares about tides. You can pick the best stock in the world, but if you buy it while the tide is running out, you'll lose. And you can pick a poor stock, but if the tide is rushing in, you can still make money. Do you see now why aligning with the tide is more important than being clever with stock picking? The hardest thing for a trader is to do nothing. When the tide is moving, you don't need to paddle frantically. You just ride. You don't fight every little wave. You let the current do the work. But human nature hates stillness. It wants action. It wants to prove it's in control. So most traders jump in and out, cutting themselves to pieces, while the few who sit tight grow rich. That's why I say the wiggles don't matter. They're just distractions. The tide is what pays. And yet, how many traders you know spend their whole time staring at the wiggles, never once asking about the tide? Think of the big bull markets, the ones that last years. They don't rise in a straight line. They rise in fits and starts, with sharp corrections, panics, shakeouts. Each of those shakeouts looks like the end to the untrained eye. Each one convinces the crowd to sell, to abandon ship. But the tide is still coming in, and those who sold on the wiggles miss the whole move. The same is true in bear markets. There are rallies, violent and fast, that convince people the worst is over. But the tide is still going out, and the rallies fade, leaving only losses. How many times have you mistaken a wiggle for a change in the tide? The language of the market is written in these differences. The wiggles are the chatter, the gossip, the noise. The trend is the truth, the underlying story. The market hides it in plain sight, but most people are too close, too focused on the daily fight to see it. That's why the crowd always loses. They're living in the wiggles. The professionals, the patient ones, they live in the trend. They listen to the tide. And once you learn to do that, everything else becomes easier. Doesn't it seem simpler to follow the current than to keep fighting it? Of course, the market is clever. It knows traders are looking for the trend. So it disguises the tide with noise. It throws in reversals, fake rallies, sudden drops, anything to make you doubt. The test is whether you can hold your nerve, whether you can recognize the wiggle for what it is. A wave in a much larger sea. If you can, you stay with the move. If you can't, you get tossed out, and the market wins again. How strong is your nerve when the market is trying to shake you loose? One of the best lessons I ever learned was that you don't need to know every tick to trade well. You just need to know the direction of the tide. If the tide is up, you look for buying opportunities. If the tide is down, you look for selling opportunities. Everything else is noise. That doesn't mean you ignore price action. It means you put it in context. You ask, is this move part of the tide, or just a wiggle against it? That one question can save you from half your mistakes. And I'll ask you now, how often do you stop to ask that question before pulling the trigger? The tide also teaches you patience. It doesn't turn on a dime. It shifts slowly, gradually, building or ebbing until the change is undeniable. The wiggles will try to fool you into thinking the turn has already come, but the tide takes time. If you jump at the first wiggle, you'll be wrong more often than not. If you wait for the tide to prove itself, you'll be late by a day or a week, but you'll be right for months. Which do you think pays more in the long run? Being early and wrong, or being a little late and right? Traders who fight the tide always end the same way, broke, bitter, blaming the market. They don't realize the market gave them all the clues they needed. It spoke the truth in its hidden language, but they chose to listen to the noise instead. The tide was obvious, but they were too busy chasing waves, and the waves drowned them. The sharpest turns in the market almost always come right after the crowd has fully committed to the wrong side. That's not an accident, and it's not coincidence. It's how the market works, how it's built. The market exists to fool the majority, to draw them in with comfort and confidence, and then flip the switch when they're most exposed. That's why you see tops forming when everyone is shouting about how high prices are going to climb, and bottoms forming when everyone is certain the end has come. The market feeds on conviction, and when the crowd is finally all in, that's when the ground shifts.